This is the Real Estate Investing 365 podcast, your go-to source for real estate investing strategies so you can start living the life you want and get where you want to go. With your host, Justin Hanna.
What's going on, everybody? Welcome to the show. Another episode, Real Estate Investing 365. Today, I got with me Drew Wiard. He is from out there in Indiana, Fort Wayne, I think. It's a Midwest market. A lot of people talk about it, getting into it because it's got higher cash flow. And he's just killing it over there, all types of things. So, Drew, thanks for being here. I appreciate it.
Yeah, thanks for having me, man. I'm excited to talk to you.
Absolutely. So, Drew, you're out in Fort Wayne. You got a lot of stuff going on. You're also a full-time pharmacist. Is that right?
Yep. Pharmacist by trade. And I'm the director of pharmacy at one of the local health systems here in town.
Okay. So what I'm going to focus on in this show for the audience, everybody knows, is that, Drew is obviously very busy. He's got the pharmacy thing going on. He's the head of pharmacy and he's got multiple businesses and he's making it all work. Plus he's got a family and like most of us do. So he's just becoming very successful at all those aspects. So we're probably going to dive into, how and why he runs it all together. So before we get started, Drew, why don't you go ahead and give everybody a little background, like where you come from. I'm sure there was life before real estate and pharmacy. And then we'll dive into all the businesses and what you got going on.
Yeah, absolutely. Well, thanks again for having me. I guess I'll give you the quick background on who I am and where I come from. I graduated in 2005 from pharmacy school and I went straight into residency and got my MBA and kind of pursued that career path. Didn't have an entrepreneurial background. My parents were, go to work hard type of people, but they didn't do crazy investments or anything like that. And so, got straight into pharmacy leadership right after, and did that for about 8 years, but super secure job. Everything was great. But then one day it just disappeared, had some new leadership and they made some changes. And despite great performance and all that, my super secure job was just gone. So I talk about that a little bit in some of the YouTube videos and things that we've posted, and we can throw some links up however you like to do that. But the long story short is I went right back to work for the other health system here in town. I know a lot of people when they lose a job don't have the opportunity to jump right back into things. So I'm grateful for that ability. But it showed me that, okay, we've got to have something else, not just this one income, because my wife stays home with our kids. And so that was kind of the start for me. So I've been investing about 6 years. I do most of that here in Fort Wayne. But yeah, I mean, that's the start of the background. I'll let you decide where we want to go from there.
Sure. Yeah, absolutely. So, which is a good thought to have, that you lost kind of like the normal job. I mean, you were able to get it back, but then you realize, hey, I got to figure something else out, another way to provide for my family. I had a recent guest on the show, Jay Helms, W2 Capitalist, he's called. And, he talks all about that. And that's kind of his whole platform. And it just happens with him, he ended up losing his job as well. But luckily he had been thinking about it for years. And he's like, well, I guess this is fine because I'll just continue in the real estate field and I have all my bills paid for, because he'd planned for it. So he'd been thinking about it ahead of time, which is good. I think a good thing for the younger generation to focus on, because a lot of times we don't plan, or the younger people don't plan as well as they should for the future, because everything's so instant, right? So,
right.
How did you decide that real estate was going to be the avenue you're going to go down instead of, people getting into stocks or dividends or all that kind of stuff?
Sure. I had been studying just kind of on the side, how do I just plan for retirement? I knew that, day trading and stuff like that probably wasn't for me because I didn't have the bandwidth during the day. At that point, I had a really young family. And so I was really looking for something passive, where I could maybe just buy that first rental or two or three, and you put some energy in for a month or two to stabilize it and then kind of hand it to a property manager and then try to rinse and repeat. And at least that was the thought process at the beginning. And so we do lots of different investing, but when it comes to rentals and things now in the local market, I think we have 41 or 42 doors. it's worked really, really well, just being passive. So I think at least starting out, that was my goal, was to be able to still focus on career, but create kind of a safety net in the background.
Sure. Okay. No, that's good. Good to think about, and especially if you have a high paying job already and you're in a market maybe that's cheaper, whatever. It makes a ton of sense. Just buy the rental properties, pass them off to property managers, and um, I like that aspect of it. Is along with syndications. A lot of people think syndications are. Why would you do that? Because you can get a better return. But if you're working full time and you're busy, it's like, well, they're perfect avenue to put some money in. It's a little more secure than stock market, and oftentimes get much better returns. So you jumped into that, I guess, 6 years ago, 2015. Was that the time frame?
Yeah, that's about right. Mm-hmm.
Okay. And then you jumped right into buying just a few single families, small multifamilies. What was like the first step into real estate?
Yeah. So, we were living in a home that we had purchased just to live in for my wife and kids. We didn't buy it at a discount. It wasn't, there was no strategy in buying the house. You just bought a house like everyone does to live in. But it was a nice 3-bedroom, 2.5 bath, nothing fancy, but solid, good neighborhood and all that. And when I got that second job, we decided to move just so that my commute would be a little bit better. And my kids were getting older, so we changed school systems and all of that. And we just turned that first house into a rental. So that was kind of that easy first transition, because I already had a house to work with. Mm-hmm. But we started that worked well for quite a while. But then I decided, okay, I don't have another house I want to turn into a rental. So let's go shopping. And then we started moving pretty quick with single families. And then eventually I moved into some fairly nice duplexes, but purpose-built duplexes where, you've got a firewall between them and matching garages, and, they're mirror images of each other on both sides. And worked on that for quite a while. And that really helped me to kind of grow my portfolio.
Yeah, that's cool. I didn't even know what a duplex was, actually. And I actually lived in half a duplex, and I still didn't even know what it was. Because when I bought my first house, it was actually half a duplex, but it was split. So they were two individual properties. I guess, I don't know what you call it. It wasn't really a townhouse, it was like the same thing, had a firewall in between, had garages and everything, and houses. And I didn't even know what it was until I bought my first duplex a couple years later. And I was like, oh, I just lived in a duplex. I just owned half of it. It was kind of funny.
Yeah. And I think different markets kind of treat them differently, right? Here in Fort Wayne, Indiana, it's really, really rare that someone would own one half of a duplex. Generally, one owner owns both sides and they rent both of them out, or they live in one and rent out the other. But in lots of other markets, it is kind of like a townhouse where you purchase half the building and are accountable for half of it.
Yeah, it was interesting. And that property was a foreclosure. I bought it in 2009, and I paid as a foreclosure. You'll find this funny from Fort Wayne, right? Because it's cheaper there. Yeah. But it was 900 square feet, my half. And I bought it as a foreclosure for $300,000. And now today, that was in 2009. Now in 2021, it's probably worth, I don't know, 600 for that half.
Yeah.
That duplex, I was like, oh my gosh. For one,
that's mind boggling.
Yeah.
Most of my entire duplexes, both sides that we've purchased, have been between about $110,000 and $140,000.
Oh my gosh.
Now, Fort Wayne is one of the cheapest, or not cheapest, but most affordable markets to live in the entire country. Mm-hmm. There's a few places in Iowa that are a little more affordable. And it's kind of odd because, Fort Wayne has, 350, maybe 400,000 people, or we're getting there. And we've seen a lot of appreciation in the last year or two. It's gotten to be a pretty hot market, but, we can buy duplexes for, $150,000, and we'll rent out both sides for 800, 850, maybe 900. And so they're not huge margins, but they're solid cash flow. And compared to some of the hotter markets, like you had referenced, it's tough to get those rental properties to work.
Yeah, for sure. Okay, cool. So you kind of got that first house, you lived in it, then you decided to move out, you rented the house that you're in. Then you kind of ramped it up quicker. Were you buying all those properties when you were kind of ramping up your rental portfolio? Were you buying those on the MLS, or at what point did you start going direct to seller?
Yeah, really good question. I would tell you, the last 6 years, the first 2 or 3 years for single families, I was able to get deals off the MLS, and then it started to dry up pretty quickly. For the duplexes that I went after, that was all direct mail type of stuff. And I didn't have a program. I didn't have a mentor. I didn't have a CRM or any of the sophisticated tools. I just hand wrote letters to mom and pop duplexes. And it worked out just incredibly well. And not just because we got decent deals on them, but most of those individuals were willing to carry back some of the financing. So we did a lot of creative deals on those where I had zero money out of my own pocket to be able to grow and expand my portfolio with. And then we just kind of stuck with, word of mouth and direct mail ever since. And then direct mail's really become a pretty big part of what I do in early 2020. And we're still doing that today.
Okay, cool. Yeah. In a minute, I'm going to jump into I'm going to get an overview of all your businesses, and then we'll kind of dive into some other stuff. But with that being said about buying direct from seller and getting a lot of owner financing on the duplexes and smaller multifamily.
Sure.
I think a lot of people are interested in that. I'm interested in it. I've done one owner finance deal, and it wasn't actually that great a deal, but whatever, that's a different story.
Yeah, sure.
But how do you go about finding those deals and then talking the owners into doing an owner finance? Do they have to be paid for properties? Can they have loans on them? Do you go right into saying, hey, I want to buy it, will you finance it? Like, how does that process work?
Yeah, no, it's a really good question. And honestly, we could probably spend an hour or two just talking about creative finance and how to do it. I'll tell you kind of how I went about it. When I started, I had bought a couple of single family houses. I had spent my investment nest egg. I didn't really have a whole lot of money. And so I had to learn how to get creative. And I would tell people, there's so much content online now, even more so now than there were, 4 or 5 years ago. You need to sit down and just model out different options and talk to people who have done it. Because there are a lot more people out there doing creative deals than I ever realized that there were. So I just spent time with, local people who could kind of explain to me how they approach it. But when it comes to, the question was, how do you find those deals? Mm-hmm. I would tell you, you never find those deals. Those deals are created. And it's on you to be able to have the knowledge base to be able to create it. So first of all, again, kind of educate yourself. But then, when I went out to talk to these people, they were interested in selling, but I just could not wrap my head around the idea that someone would want to provide the financing. Like, who does that? And why would they do that? Right.
Yeah.
I had to learn real quickly that people are much more open to it than you would probably think. Especially these duplex owners, because they've been landlords probably for a long time, or at least a while. They understand it's more of an investment, as opposed to when you're buying a single family house from someone where there might be emotions, or the family lives there, or they have to sell it to get to the next house. So when you're looking at buying with seller financing from people who kind of understand investments, they're much more open to it. But you just got to ask. You just have to ask, you want to learn kind of what their needs are and what their motivations are.
Right.
And then you just start to ask, what would their level of interest be in, are you looking for an all cash offer? Is seller financing an option? And you just start the conversation.
Yeah. So probably the key to that is you're not going to go and it's probably not a great idea to go and send direct mail to somebody and in the letter say, I would like to buy your property, but I want you to owner finance it.
Right.
Nobody's going to call you and say, oh, this is a perfect, maybe you get a one-off that would, but most of the time they're not going to. So it's more, you probably have to address it like you're interested in buying their property, whether you mail them or call them, or you meet them at a meetup or through a friend. And then as you start talking to them about wanting to buy it, like you said, you kind of want to pull on their, find out what their needs are, find out what their reason behind selling it. And at a certain point, then you can say, well, I'd love to buy it. Would you ever be considered an owner financing? You know what I mean? And the one thing you said about not ever considering it before, like, why would people do that? Well, a lot of times if somebody has owned a property for a long time, if they sell it, they're going to have a big tax burden. they might be older and they're relying on the income from the property, but they're just tired of renting it. So
Yep.
there's lots of reasons why somebody might want to do the owner financing.
Yep.
One question I've had, and I want to see what your thought is does the property have to be paid for already for them to owner finance it? Or like, is it has to be a free and clear property, or can it have a loan on it already?
Sure. Really good question. I've seen it done both ways. It does not have to be paid off. I think that's a misconception that a lot of people have. Now, a lot of times it will depend on the lender that's in place, whether or not they're okay with that. And so if I'm buying a house from you, Justin, your bank might say, okay, we're going to be okay with this, but we want Drew to sign a subordination agreement that says that if something goes wrong, the bank is in first position and they get theirs first in the event of a foreclosure or, some sort of fallout. And so I've done that a couple of times, but that's the way you can make that happen.
Sure. Yeah. So you just have to check with their bank, with their lender, and make sure it's okay. And yeah, a lot of times the banks will do it and just make sure there's no like due on sale clause or anything like that they'll kind of get screwed from the transfer of the title.
Right. Yep. Absolutely.
Okay. No, that's a good plan. I've mentioned it a few times. I had one guy, Gabriel Hamill, on here, and he's bought 180 units, I think, and every single one's been owner finance, so
yeah,
it's definitely a great way to go. You just have to like break into it and learn and educate yourself, like you're saying. So, so moving on to like the next part, what I wanted to get to was, can you kind of explain to people what businesses you have going on right now? You're a pharmacist, and then what other stuff you have going on. And then I want to dive into how you make all that work together with your busy time, your family, and all that stuff. So what businesses do you have happening right now?
Yep. Really good question. So when I think of my investment strategy or my portfolio, I kind of think of it as a stool, and there are 4 legs to the stool, right? And if you lose one of them, maybe it still stands up. You lose 2 of them and it's not as robust as it probably should be, right? So I have 4 legs to the stool that I maintain. One of those is my rental portfolio, and we've talked a little bit about that. Another one is my business known as Clear Sky Properties, and this is it's direct to seller marketing. A lot of people would think of it kind of like a wholesaler business. The difference is I like to keep just about everything I find, and we'll flip a few. I have wholesaled a couple out of that, but I'm not looking to do just a transactional business out of that. I want to find the best rentals I can and then move them over to that other leg of the stool. The third leg of the stool is me and my partners do apartment syndications in Phoenix, Arizona. And that has been just a phenomenal project because Phoenix is just on fire, and it's been great. So we've done, 600 or 700 units at this point out there. And so that's been the third leg. And then for now, the fourth one is just my W-2 income. And I listened to you and Jay's episode, and I'm exactly where Jay is, right? No one has made that decision for me that the W-2 goes away, but I'm building other things to support it so that if and when that time comes where we have to rip the cord, that we've got something to stand on. And then there's a couple of other little miscellaneous projects that I have maybe as that fourth stool.
Sure. Okay. No, that's awesome. And now we know you're busy. So how do you kind of like run all this stuff together? You know what I mean? Like, do you use leverage? Are you hiring people? You mentioned you have partners. Like, how did that all come about? And how did you kind of put it all together to run while you're working your W-2 job?
Yeah, really, really good question. And I get asked this a lot. This is probably the most common question that I get asked. And so my first answer will be to tell you that I don't know that I always do it very gracefully. I really enjoy kind of staying busy and being productive and working on things that I can see grow. And so that's very fulfilling to me. But there are times where I've had to pump the brakes and say, no, my family needs, I've got 4 kids just like you have. Right. And so it's crazy sometimes. The other thing I think that people forget, right, is like, it took me 6 years to get my doctorate at school, right? And no one comes up to me and says, hey, can you teach me this weekend how to be a pharmacist? Like, you can't stuff that much experience and 6 years worth of work into, all right, yeah, I'll just show you real quick. Well, and I've kind of learned in the last year or so, it's kind of the same with the real estate stuff. So I can give tidbits, but it's when you see someone who's been doing it a while and they start to, find their success, as much as they want to help you, it's almost impossible to, push it all down into a couple of conversations. But I think it's really important to find one thing and focus on it. I know I've got a lot of different things going, but I think you want to find one niche and start working through it until you're confident that you've got that tool ready to put in the tool bag. And that's kind of what I've done, is pick one thing, get good at it. And then if you want to learn a second, great. If you want to learn a third, great. But don't try to do 7 things at once. That's a quick way to get complicated and overwhelmed, and you just won't get the traction that you
burnt out.
Would like to have.
Yeah, it's an easy way to get shiny object syndrome and just like bouncing from one thing to the other. So I listened to a podcast a long time ago with who is it? Mike Kinney, I think, or some big real estate guy, and Keller Williams, and Ben Kinney, that's his name. And he always says kind of like the one thing, that book, The One Thing, it's like stick to one thing and then build it to a point where it's kind of like second nature. You know exactly what's going on and all the different ins and outs of it. And then it frees up your mind. Even though you're still working on that, you can then all of a sudden focus more harder on another aspect of something else. So I think that's what you've done. I know right now you're kind of hiring for a few positions. How are you going about hiring for those positions? Are you posting them on like Wise Hire? Are you just reaching out to the local community? Like, what's your process for hiring a couple employees? I think some of your first employees, right?
Yep. Yeah, absolutely. So in my W-2, I've been building small teams and hiring for 15 years, and I'm very comfortable with that. But man, when you're doing it yourself and growing your own business, it's you don't have the structure, you don't have an HR department, you don't have all that support. And so 2 hires that we're looking at. The first one is a transactions coordinator. So basically, I get a new house and it's under contract. I currently am calling the title company and I'm calling the insurance and I'm turning the utilities on and all this, that, and the other. And I don't have the time or energy to do that. I need to be taking care of patients and my staff at the hospital during the day. Mm-hmm. So to hire that individual, mostly in the local community, just kind of put the word out that this was what I was looking for, because I didn't think we would struggle to find someone who was qualified and motivated to assist in that role. The next role that I'd like to work on probably this week and next is to hire an acquisitions manager for Clear Sky Properties. And again, that's my direct to seller type of marketing. Someone who can be on the phone. Like I have leads coming in every day, and when on earth am I going to call them? I just can't. I'm just getting overwhelmed. And so I need someone who can be on the phones, who can go to those appointments, and we will probably use some sort of professional service like Wise Hire to find a very specialized candidate for that, because it's a very particular set of skills that we're looking for.
Mm-hmm. Okay. No, it's good to know. I do know, like I think I've mentioned other podcast guests, Drew and I are both in CCF with Ryan. That's not exactly why I wanted him here, just because he was in that, but we just happened to be in the same group. So I just wanted to touch on, do you think it's important to go and be part of a group, like a mastermind? It doesn't have to be CCF. It can be all kinds of different masterminds out there, but what do you think the importance is of being part of that? Or should you just kind of go it alone, and can you use bigger pockets and learn all that information?
Yeah, really good question. You can't go it alone. I mean, maybe you can. I could not have done it. Despite my gifts and talents, it is my network that has put this together. So do you have to join a mastermind or something like that? I don't think you have to necessarily, but at the front end, you need to be going to your local real estate investors association or the local RIAs. I host the local RIA here in Fort Wayne, along with one of my buddies, Adam. And if I didn't have that group, like I built it because I didn't know enough, right? Like I wanted to learn and grow along with them. And so networking is absolutely everything to help you be successful. And in the last 2 or 3 years, I've kind of come to the point where there's still a lot to learn from my local people, but I really want some of that specialized knowledge. And so I think there's going to be a time where joining a mastermind that has a very specific focus makes a lot of sense. And some people struggle to get over that hump. I mean, if it costs $10,000, $20,000 to join, but it can help you earn six figures in the next year, man, I'll take that deal 6 ways to Sunday, you know?
Yeah.
So not that you should always have to pay to hang out with people. I don't think that's the right thing, but know that you should not have to necessarily do it all on your own, and surround yourself with good people that have similar mindsets, I think is really, really important.
Yeah, totally. Yeah, I think the networking part is like one aspect of it, to where you can get on bigger pockets. You can go to RIAs, go to meetups, get in your Facebook group, and that sort of thing. People to hang out with and be personal with. And then the next level of networking would be hiring a coach to get you, like you said, do like a specific spot. You know, Ed Milet has a coach. You know what I mean?
Mm-hmm.
He's with $500 million and he has somebody helping him. Andy Frisella has a coach. You know what I mean? All these people.
Yeah.
So it's about, you know, if you want to get somewhere quicker, the money doesn't really matter. And I think I mentioned this before, but you know, like it comes to a time like when you're bringing on an investor that's going to give you $5,000, they're all concerned about that $5,000 and all the legalities of it. Then you supposedly, I don't know this, but you bring in an investor that's giving you $500,000 and they're like, whatever, man, just make me more money. You know what I mean? Yeah. So they're willing to spend the money because they know it's going to work out. So maybe that's a shift in our mindset, myself included, that we all need to make. So one question I like to ask everybody here before we kind of like transition to the last part is, you know, all the markets are hot right now. Fort Wayne, you said it's been kind of appreciating quickly in the last year or two. What do you think about that? Do you think that people can still get in real estate now and like buy and find good cash flowing deals? Should they kind of hold off? What's your thoughts on that?
Yeah, I'm a big fan of not holding off. I do think that, you know, the normal cycle of real estate is about 7 years and we're in year 13. Right. So it has to at least cool off at some point. I mean, if you just look at historical data. But man, I've watched a lot of people who stopped buying in 2016, 2017, 2018, thinking we were at the top. And that's when I've been buying, you know, and I've got good equity positions. I've got, you know, very adequate cash flow. If all the money stopped today, you know, we've got enough runway to be able to cover that for a while. And so I think you are not going to find good deals, but like I said before, good deals are created. And in a hot market like this, you have to have the knowledge and the network to be able to create deals. So I think you need to have peers around you so that when you find what feels like a deal, you can bounce it off 3 different people and say, what do you think about this deal? Because the first one might hate it, but the second one loves it. And so again, your network's super important. You can find good deals. People are making money in today's market. You should be cautious, but I continue to buy. I haven't stopped by any means.
Yeah. I think, you know, this is something I just thought about while you were saying this. And, you know, I think before the crash in 2008, you know, early 2000s, 90s and the 80s and stuff, real estate investing there's a lot of people doing it, but it wasn't as mainstream, you know, as everybody, as it is today. And partially that's because of social media and just the access to everything. But also partially because what I think is due to the crash, a lot of people saw so many people making so much money in that era from 2009 to 2013 that they're like, oh my gosh, this is amazing. Yep. That's like a once in a lifetime thing. I can't really see it going back to that. Who knows? I mean, maybe, but that hadn't really happened that big of a crash since the 30s, right? It's kind of a once in a century kind of deal. Yeah. So we might have little ebbs and flows and ups and downs. But I think what it's turned back into is the same real estate game that it was in the 90s or in the 80s or sometime when you had to actually know what you're doing and like do the research, like make sure it's a good deal, make sure you know how to do your numbers, network with people. You can't just go on the MLS and buy something and next year it's going to be worth 50 grand more. I think that's kind of out of the way. So I think a lot of people have got more popular. And so I think the popularity might kind of tend to flatten out or slow down a little bit. But there's going to be good deals as long as you're doing your numbers and you know what to look for.
Yeah, I would agree. I think you need to understand what sound real estate fundamentals look like, because they'll protect you in up markets and down markets. If you're buying something top of market today, expecting it to appreciate in the next 2 or 3 years, man, that is a recipe for disaster. It might work, but that model's not going to work forever.
Yeah, I'm finding that here in Boise area. It's like I'm losing deals left and right to other investors, and they're literally paying like, 90% of its current value. And then they're just
Yeah.
turning around and putting them on the MLS, hoping for it to go up in price. And I'm thinking, well, it's probably working,
Yeah.
but it works until it doesn't work, And
Yeah.
so it's
Yep.
just, I guess it just takes longer in other markets. So,
Sure.
well, this is a ton of good information, Drew. What's kind of the plans in the future for you? Where are you headed? What's the businesses
Sure.
look like? Are you going to stay in pharmacy? Are you going to leave? What's the next 5 years look like for Drew?
Yeah, really good question. For now, I work with really great people. It's a handsome salary that would be kind of tough to walk away from. I could if I have to, but that's not an immediate goal. I am exploring. I'd like to stabilize Clear Sky Properties. We've been really successful with buying probably a deal a month, sometimes 2 deals a month, and I'd like to get to the point with this new team coming in where we're getting 1 a week or 4 per month. That's kind of the goal for that. And if we can get that stabilized, I've really started looking at commercial and industrial opportunities. Just exploring it, trying to learn the niche. I haven't done it, so I'm learning about it. And we'll keep firing away in Phoenix because, man, the deals they're really tough to come across. But when you find the right one, it's really impactful. So we'll play with the syndications too.
Well, real quick, let's talk about Phoenix just for a slight second.
Yeah.
So Phoenix is on fire for 10 years in a row. You know what I mean? It's been just killing it. So for one, how are you getting like these still good deals? And a lot of people think, well, aren't all the good deals already taken up? What do you think about that?
Yeah, really good question. It is an unbelievably popular market. Deals are incredibly difficult to find. Most people's model for syndication is the partners want to buy it and hold it forever. So they will syndicate it and bring other limited partners along. But at some point they refinance those limited partners out and the general partners will hold it forever. Our model is such that we plan to hold it for 5 years or less and really pursue a value add type of model. So we find a great asset that's probably been neglected a little bit, reposition it, and to the point where we can raise the rents $300 to $400 per month. We acquired one in the last 2 years where we bought it for about 12 million. We just exited for 20 million. And so the investors are thrilled. We're thrilled. But you have to find that value add opportunity. And they're getting harder to find, but when you find them, they work.
On those deals, on the deals you do there, do you pay your investors like monthly, quarterly, or is it yearly? How's the payout work for like a Class B investor or whatever?
Yeah, sure. So when limited partners come along with us, they're set up for quarterly distributions once we start hitting certain metrics that we're pursuing. But for us, the biggest payoff for just about everyone is at the exit when we sell. And again, we expect those to be about a 5-year hold, but with the rate that Phoenix has been going, we've been under 2 years on the last 2 projects. And, people who come along with us, they should still expect it to be a 5-year project, but man, it's just going so fast and has been so successful. We're just elated with it. It's been great.
That's cool. Awesome.
Yep.
Well, Drew, there's tons of good information here. Where can people find out more about you? I know you got a new YouTube channel and all that sort of thing. So where can they get you? Yeah.
So if you search YouTube, just my name, Drew Wiard, or you can search The Flying Investor. I do a lot of paramotor flying. Anytime I get a free minute, I'm in the sky. And so that YouTube channel really is just a blending of teaching real estate while I fly. It's much better to look at than just a guy writing numbers on a whiteboard, right? Which is what most of real estate videos on YouTube are.
Yeah.
And so we've got the second episode that should be coming out in the next few weeks. But other than that, Facebook, Instagram, at The Flying Investor is a good way to find me. But reach out anytime. Happy to chat.
Right on. Well, all that information will be in the show notes. Drew, thanks for being here. This is good information. And everybody reach out to Drew if you have questions. So have a good day out there in Fort Wayne. Have a good day in Fort Wayne.
Yep. Hey, thanks for having me. I appreciate it.
Yeah.